Welcome back to the Top 1% Book Club. Where we kind of dig into those really important books for ambitious folks like you guys.
Yeah.
Today we're diving into Rich Dad's Guide to Investing by Robert Kiyosaki. Now, if you've ever felt like the whole path to wealth is kind of a mystery, right?
Yeah.
Kiyosaki really tries to shine a light on that.
Yeah, what's so fascinating about Kiyosaki is that he doesn't just focus on, picking stocks or anything like that. He digs into that, mindset you need.
Right.
The types of income that really build wealth.
Right.
And then those, hidden opportunities that most people completely miss.
He really hammers home the idea that the rich don't work for money. Their money works for them.
Right.
What exactly does he mean by that?
It all comes down to building assets.
Okay.
Things that generate income even when you're not clocking in.
Okay.
Think of it like having little employees working 24/7, bringing in cash while you sleep.
Okay, so it's not just about getting a raise or winning the lottery. It's about creating a system that kind of works without you having to be there all the time.
Exactly.
But how do we even begin to do that? A lot of this financial stuff can feel so overwhelming.
That's where financial literacy comes in. Kiyosaki stresses that anyone can learn to analyze opportunities and make smart decisions.
Right,
It's like learning a new language, the language of money.
right.
Once you understand it, you can spot good deals and avoid those risky schemes that promise overnight riches.
So instead of being intimidated by financial statements and all that stuff,
Yeah.
we need to learn how to read them and understand what they're actually telling us.
Exactly. It's about knowing a company's true health, not just taking someone's word for it. Kiyosaki also talks about the importance of experience.
Yeah,
He's a big believer in starting your own business, even if it's small at first.
I remember that story about him working for Rich Dad for just 10 cents an hour, and then even having his pay taken away.
Yeah,
It seemed kind of harsh, but there was a deeper lesson there, wasn't there?
absolutely. Rich Dad wanted him to focus on the skills and mindset that build real value,
Okay.
not just trading time for dollars. He wanted him to learn how to create income, not just earn it.
So it's not just about seeking a bigger paycheck. It's about developing the skills that make you really indispensable. Then there's this whole idea of maximizing expenses and minimizing income.
Right?
That sounds totally counterintuitive.
Yeah, it's one of those ideas that really gets people talking. And it's important to understand what Kiyosaki means here. He's not saying to blow all your money on fancy things you know.
Right.
It's about strategic investment.
So investing in things that grow your business or your earning potential, not just your lifestyle.
Exactly. Think of it this way. Are you spending money on liabilities? Things that drain your account?
Yeah.
Or assets? Things that generate more income?
Right.
Education, expert advice, acquiring those income-generating assets we talked about. Those are the things that ultimately boost your earning power.
And I've heard businesses can often take advantage of tax laws to write off certain expenses right. It's like investing in new equipment or employee training.
That's right. It's all about taking a strategic approach, understanding the rules of the game and making them work for you.
Kiyosaki also breaks down different types of investors, doesn't he?
He does.
Kind of helping us figure out where we fit in and where we want to be on this wealth-building journey.
He outlines 5 levels.
Okay.
From accredited all the way to the ultimate investor.
Okay.
It's like a roadmap showing you the characteristics of each level and how you can level up your investing game.
So if someone's listening and thinking, okay, I'm at the accredited level, how do I get to the next stage? What would Kiyosaki say?
He'd likely tell them to focus on building those 3 E's:
Okay.
education, experience, and excess cash.
Got it.
It's about gaining financial literacy, putting that knowledge into practice, and creating a surplus you can reinvest for even bigger wins.
It's a journey, not a quick fix.
Exactly. And Kiyosaki provides some intriguing insights into how to navigate that journey. He introduces this concept of the insider investor, someone who isn't just passively buying stocks, but is actively involved in shaping the businesses they invest in.
Okay, so it's like they have a seat at the table, influencing decisions and having a real impact.
Exactly. This could be starting your own business, taking a controlling stake in an existing company, or even being an advisor who has real influence.
That's a whole different level of engagement. It's not just about watching from the sidelines. It's about being in the game.
Precisely. And that's where the BI triangle comes in. It's Kiyosaki's framework for building a successful business, from defining your mission to mastering cash flow and communication.
It's like a blueprint for success.
It is, and one of the reasons it's so powerful is that it emphasizes the interconnected nature of business. It's not just about having a great product or service, it's about having a solid foundation, a great team, strong leadership, and the ability to manage your finances and communicate effectively.
He really makes it clear that business is a system, and you need to understand how all the parts work together to create something sustainable and profitable.
Absolutely. And that entrepreneurial mindset, that ability to see the big picture and understand how the pieces fit together, is what sets successful investors apart.
And this ties back into that idea of the insider investor, doesn't it? By understanding the inner workings of a business, you're in a much better position to assess its true potential and make smart decisions.
Exactly. You're not just relying on numbers on a spreadsheet. You're seeing the story behind those numbers, the people involved, and the vision for the future.
It's a much more holistic approach to investing.
It is. And Kiyosaki argues that it's this kind of thinking that can lead to truly extraordinary results.
So we've talked about building assets, financial literacy, and the importance of experience. Kiyosaki also breaks down different types of income, doesn't he?
Yes, he talks about earned income, portfolio income, and passive income. And he stresses the importance of shifting your focus from earned income, that's the money you make from your job, to portfolio and passive income.
Because those are the types of income that can continue to generate wealth even when you're not actively working.
Exactly. He argues that building a portfolio of income-generating assets is essential for achieving financial freedom.
So rental income, dividends from stocks, royalties from books or music, these are all examples of passive income that can help you build wealth over time.
Right, and he emphasizes that the sooner you make this shift, the faster you can build wealth and achieve financial freedom. But it's not just about making money, is it?
No. He also talks about the importance of giving back, right?
Absolutely. Kiyosaki believes that true wealth is about more than just accumulating money. It's about using your resources to make a positive impact on the world.
So it's about aligning your financial success with your values and your purpose.
Exactly. And it's about recognizing that true success is about more than just yourself. It's about leaving a legacy that benefits others.
Kiyosaki really challenges us to rethink our relationship with money, business, and success.
He encourages us to become active creators of our financial futures, not just passive participants in the system, to think like entrepreneurs, not just employees.
So it's about taking control, making informed decisions, and building a life of abundance on our own terms.
Exactly. And that's a powerful message for anyone, regardless of their current financial situation.
Now, one of the most fascinating parts of Kiyosaki's book is how he breaks down the steps to becoming a sophisticated investor. He calls it the 5 phases of investing.
And each phase builds upon the previous one, equipping you with the knowledge, experience, and confidence you need to navigate the often complex world of finance.
It's like leveling up in a video game. You start at one level, and as you gain experience and master new skills, you advance to the next level.
I love that analogy. He really emphasizes that investing is a process, a journey of continuous learning and growth.
So let's dive into those phases. Phase 1 is, are you mentally prepared to be an investor?
This is where Kiyosaki challenges our deeply ingrained beliefs about money and wealth. He calls it our money blueprint.
He talks about the difference between a scarcity mindset where you believe there's never enough and an abundance mindset where you believe there's plenty for everyone.
Exactly, and he argues that most people operate from a scarcity mindset, believing that money is limited and hard to come by.
Which can lead to fear, anxiety, and a constant struggle to make ends meet.
Precisely, and this scarcity mindset can prevent us from taking risks, pursuing opportunities, and building true wealth.
So how do we shift from a scarcity mindset to an abundance mindset?
Kiyosaki suggests we start by becoming aware of our limiting beliefs about money. Those thoughts like, I'll never be rich, or money is the root of all evil.
We need to identify those beliefs and then challenge them. Replace them with more empowering beliefs like, there's plenty of money for everyone, or money is a tool that can be used for good.
Right, and as we shift our beliefs, we start to see the world differently. We become more open to possibilities and opportunities.
It's like putting on a new pair of glasses and seeing the world in a whole new light.
Exactly, and the shift in mindset is crucial for becoming a successful investor.
So phase 1 is all about getting our minds right, setting the foundation for success.
Precisely, it's about preparing ourselves mentally and emotionally for the challenges and rewards of the investing journey.
Kiyosaki also talks about the importance of seeing the world from multiple perspectives.
He wants us to challenge our assumptions, and expand our awareness.
Hmm.
To recognize that there's more than one way to view the world and that our perspective shapes our reality.
He uses the example of the 90-10 puzzle.
Yeah.
He points out that 10% of the people control 90% of the wealth.
And he challenges us to ask why that is. What sets those 10% apart?
What are they doing differently? What do they see that others don't?
Kiyosaki argues that it comes down to their mindset, their beliefs about money, and their willingness to see the world differently.
They're not afraid to challenge conventional wisdom, to see opportunities where others see risk.
Right. They're willing to step outside of their comfort zones and to think differently.
So it's about expanding our awareness, challenging our assumptions, and being open to new ideas.
It's about recognizing that our perspective can either limit us or empower us.
And choosing to see the world through the lens of possibility rather than the lens of limitation. Which brings us to phase 2. What type of investor do you want to become?
Here, Kiyosaki really encourages us to create our own unique path to financial success, to define our own goals, values, and risk tolerance.
It's about taking ownership of our financial future and creating an investment strategy that aligns with who we are and what we want to achieve.
Exactly. And he outlines several different investor profiles, helping us identify the one that resonates most with us.
There's the accredited investor, the qualified investor, the sophisticated investor, the insider investor, and the ultimate investor.
Each profile has its own characteristics and strategies.
So it's not a one-size-fits-all approach?
Not at all. It's about finding the path that best suits our individual circumstances and aspirations.
So let's take a closer look at these different investor profiles, starting with the accredited investor. What defines this type of investor?
An accredited investor typically has a high income or net worth that allows them to participate in more exclusive investment opportunities. They meet certain financial criteria that open doors not available to everyone.
Kiyosaki mentions that less than 3% of Americans actually qualify as accredited investors. So this is a pretty exclusive group.
It is. But while they might have access to more opportunities, it doesn't guarantee success. Even accredited investors need to be savvy and do their due diligence before jumping into any investment.
So it's not just about having the money, it's about knowing how to use it wisely.
Exactly. And that's where the next investor profile comes in the qualified investor. This type of investor goes beyond just having the financial means. They've also invested in their own financial education, learning how to analyze investments and make informed decisions.
So they're not just relying on their wealth or their connections, they're developing their own financial intelligence.
Right. They understand how to read financial statements, evaluate market trends, and make sound judgments based on their own knowledge and analysis.
Then we have the sophisticated investor. What sets this type apart?
A sophisticated investor operates on a deeper level. They have a comprehensive understanding of the investment world, including the legal and regulatory frameworks that come into play.
So they're not just looking at potential returns, but also considering the risks and the legal implications.
Exactly. They're playing the game at a higher level, understanding the nuances and complexities of the financial system. Kiyosaki suggests that if you're not looking to build your own business, but still want to achieve significant success as an investor, aim to become a sophisticated investor.
So it's about investing in your financial education, building your analytical skills, and surrounding yourself with trusted advisors who can provide guidance.
Precisely. Now, this brings us to one of the most intriguing profiles, the insider investor. This is the investor who seeks a degree of control over the businesses they invest in.
It's not just about buying stocks or bonds. It's about having a say in the direction of the company.
Exactly. It might involve starting your own business, buying a controlling stake in an existing company, or even being a highly influential advisor. Kiyosaki argues that this can be incredibly lucrative because you have access to information and opportunities that outside investors don't.
So it's about leveraging your knowledge, your network, and your expertise to gain an edge.
Right. And it's about understanding that the most valuable assets are often the ones you have a hand in creating.
Finally, we have the ultimate investor. This is the investor who has reached the pinnacle of success. They've built a thriving business, taken it public, and are reaping the rewards of their vision and hard work.
They're the Bill Gates and Warren Buffetts of the world.
Exactly. They've created immense wealth, not just for themselves, but for their investors and society as a whole.
They serve as an inspiration, showing us what's possible when you combine entrepreneurial skills with financial intelligence.
So we have these 5 investor profiles, each representing a different level of expertise and engagement. And as we move through these phases of becoming sophisticated investors, we can use these profiles as guideposts helping us chart our own unique path to success.
It's about recognizing that there's no one-size-fits-all approach to investing. It's about finding the approach that resonates with you, developing the necessary skills, and taking consistent action.
It's about enjoying the journey and embracing the challenges and triumphs along the way, because the journey is just as important as the destination.
Now, as we move on to phase 3, Kiyosaki asks, how do we build a strong business? This is where the BI triangle really comes into play.
It's his framework for creating a business that not only survives, but thrives.
And the beauty of it is that it can be applied to any type of business, from a small startup to a global corporation.
So let's break down the BI triangle.
It consists of 5 key elements: mission, team leadership, cash flow management, and communications. And each element plays a critical role in the success of the business.
It's like a recipe. If you leave out one ingredient, the whole dish can fall apart.
Exactly. So let's start with the foundation mission. Why is mission so important?
It seems like it's about more than just making money. It's about having a deeper purpose, a reason for existing beyond just profits.
You're absolutely right. Kiyosaki argues that a business needs a strong mission to provide direction, purpose, and inspiration. It's the driving force, the answer to the why behind everything you do.
It's what gets people excited to come to work, what attracts customers who believe in what you're doing, and what helps you make a positive impact on the world.
Precisely. Kiyosaki believes that the most successful businesses are those driven by a higher purpose, a desire to create something meaningful and lasting.
He talks about having both a spiritual mission and a business mission. What's the difference between the two?
The spiritual mission is the big picture why. Why does this business exist? What problem are we solving? What impact do we want to make on the world? The business mission gets into the how. What are our products or services? Who is our target market? How do we deliver value to our customers?
So it's about aligning your head and your heart, the practical and the inspirational. When those two forces work together, that's when the magic happens.
I couldn't have said it better myself.
So we have the mission, the foundation of our business. But a strong foundation is only the beginning. We need a great team to bring that mission to life right.
Absolutely. That's the next element of the BI triangle team. No one succeeds alone. We all need the support, expertise, and collaboration of others, especially in the world of business.
He talks about surrounding yourself with people who are smarter than you,
Yeah.
people who challenge you and inspire you to grow.
That's right. It's about building a team where everyone is aligned with the mission, where everyone feels valued and respected, and where everyone is working together towards a common goal. It's about fostering a culture of collaboration, innovation, and excellence.
So it's not just about hiring talented people, it's about creating an environment where they can thrive and do their best work.
Exactly. And that brings us to the next element of the BI triangle leadership. What does Kiyosaki say about leadership?
He emphasizes that true leadership is not about bossing people around. It's about inspiring and empowering others to achieve their full potential.
It's about setting a clear vision, communicating effectively, and creating a culture of accountability. He talks about being a servant leader, putting the needs of your team first.
He also mentions the importance of having a mentor, someone who has already achieved the success you aspire to.
A mentor can provide invaluable guidance, support, and insights based on their own experience. They can help you avoid pitfalls, navigate challenges, and accelerate your growth.
It sounds like having a mentor can be a game changer.
It's like having a guide on your journey, someone who can help you navigate the terrain and avoid getting lost.
So leadership is about setting the tone, inspiring the team, and guiding the business towards success. But even with a great mission, a strong team, and effective leadership, a business can still fail if it doesn't manage its money wisely. Which brings us to the next element, cash flow management. Why is this so important?
Kiyosaki emphasizes that cash flow is the lifeblood of a business. Without it, the business simply cannot survive. It's about managing your money effectively, making sure you have enough cash on hand to cover your expenses and to invest in future growth.
I've heard people say turnover is vanity, profit is sanity, but cash flow is reality. It seems like Kiyosaki would agree with that.
He talks about the importance of understanding the difference between profit and cash flow. You can have a business that's profitable on paper but still run out of cash if you're not managing your cash flow properly.
So it's about understanding your financial statements, tracking your income and expenses, and making sure the money coming in is greater than the money going out.
Right, and it's about being proactive, anticipating potential cash flow challenges, and having a plan in place to address them. Kiyosaki offers some great tips on how to manage cash flow effectively. For example, he suggests delaying taking a salary until the business is generating enough revenue to cover it.
He also recommends keeping overhead low and negotiating favorable payment terms with suppliers. It sounds like it's all about being smart and strategic with your money.
It is, and having a plan for how you'll invest the cash you do have. Now, we've talked about the importance of mission team leadership and cash flow. What's the final piece of the BI triangle puzzle?
That would be communications.
Yeah.
And it seems like this goes beyond just sending emails or making phone calls. It's about connecting with people on a deeper level.
Exactly. Kiyosaki argues that effective communication is crucial for building relationships, creating trust, and achieving results. It's about being able to articulate your vision, inspire your team, persuade your customers, and build rapport with investors.
So it's about mastering both internal communication,
Yeah.
how you communicate with your team, and external communication, how you communicate with the outside world.
Precisely. And it encompasses everything from marketing your products and services to building your brand reputation and nurturing relationships with customers, investors, and partners.
Kiyosaki also talks about the importance of developing strong communication skills.
He believes that being able to effectively convey your ideas, articulate your value proposition, and connect with your audience on an emotional level can be a game changer in business.
So the BI triangle is really a comprehensive framework for building a successful business.
It is. It's about understanding the key elements of a thriving business and how those elements work together to create a sustainable, profitable enterprise.
And the best part is that it can be applied to any type of business, regardless of its size or industry.
Now, as we move on to phase 4, Kiyosaki asks, who is a sophisticated investor? This is where we start to see the BI triangle in action, how the skills and knowledge we've developed can be applied to making smart investment decisions.
So it's not just about having a lot of money, it's about having the knowledge and the mindset to use that money effectively.
You got it. Kiyosaki argues that a sophisticated investor understands the game of money, can analyze opportunities, manage risk, and make informed decisions that lead to long-term wealth. They're playing the long game, not chasing quick profits.
So let's dive into what makes a sophisticated investor tick. What are some of the defining characteristics?
First and foremost, they understand the fundamental difference between assets and liabilities.
And we know this is a core principle in Kiyosaki's philosophy. Assets put money in your pocket, while liabilities take money out.
Exactly. A sophisticated investor is constantly on the lookout for opportunities to acquire assets and minimize liabilities. They're not interested in accumulating possessions that drain their cash flow. Their focus is on building a portfolio of income-generating assets that will work for them even when they're not working.
So it's about building a system that generates wealth, not just working harder to earn more money.
That's right. Another key characteristic is understanding the power of leverage.
Leverage is using borrowed money to potentially amplify your returns.
Exactly. It's a powerful tool, but it can be dangerous if you don't know what you're doing. A sophisticated investor knows how to use debt strategically to acquire assets that will appreciate in value or generate income.
They understand the difference between good debt, debt that's used to acquire income-producing assets, and bad debt, debt that's used to buy things that lose value over time.
Precisely, and they're always looking for opportunities to use good debt to their advantage.
What else sets sophisticated investors apart?
They understand the importance of tax strategies. They know how to legally minimize their tax liability and keep more of their hard-earned money. They're not just looking at the pre-tax returns, they're considering the after-tax implications of their investments.
So it's about working with tax professionals and developing strategies that are both legal and beneficial.
Exactly, and Kiyosaki emphasizes that understanding tax laws can be a powerful tool for building wealth. Now, another key characteristic is that a sophisticated investor is a lifelong learner. They're constantly seeking to expand their knowledge to stay ahead of the curve and to adapt to the ever-changing market conditions.
They're reading books, attending seminars, and networking with other successful investors. They're not afraid to ask questions and challenge their assumptions.
They understand that the more they know, the better equipped they are to make sound investment decisions.
So it's not just about having money, it's about having the knowledge and the mindset to use that money effectively.
Absolutely. Now, along with being a lifelong learner, a sophisticated investor is also patient and disciplined. They're not chasing quick profits or trying to time the market. They're investing for the long term, riding out the inevitable ups and downs of the market and focusing on building a solid foundation for their financial future.
They're not letting their emotions dictate their decisions. They're sticking to their plan and making calculated choices based on careful analysis.
Exactly. And this leads us to another important characteristic: risk management. A sophisticated investor understands that all investments come with some degree of risk, and they're comfortable managing that risk.
They're not afraid to take risks, but they do it intelligently.
Right. They diversify their portfolios, spreading their investments across different asset classes and sectors so they're not overly exposed to any one particular investment.
And they use strategies like stop-loss orders and hedging to help protect their investments and minimize potential losses.
Exactly. Now, along with being a risk manager, a sophisticated investor is also a networker. They understand the value of building relationships with other successful investors, mentors, and advisors.
They're not trying to go it alone. They're leveraging the knowledge, experience, and connections of others to enhance their own success.
They attend industry events, join investment clubs, and seek out mentors who can provide guidance and support.
It's like they're building a team of experts to help them navigate the world of investing.
You got it. Now, here's another characteristic that might seem counterintuitive. A sophisticated investor is a contrarian thinker.
They're not afraid to go against the crowd.
Exactly. They challenge conventional wisdom and see opportunities where others see only risk.
They're not following the herd. They're forging their own path.
They think independently, do their own research, and make decisions based on their own analysis. And this often leads them to opportunities that others miss.
Now, along with being a contrarian thinker, a sophisticated investor is also a value investor.
They're looking for investments that are undervalued by the market, investments that have the potential to generate significant returns over time.
They're not swayed by hype or speculation. They're doing their homework and identifying companies with strong fundamentals that are poised for growth.
Exactly. And finally, a sophisticated investor often embodies the spirit of an entrepreneur. They understand that one of the most effective ways to build wealth is to create your own business.
They're not content with just working for someone else or passively investing in someone else's business.
Right. They're taking control of their financial destiny by building their own empires and creating a legacy that will last for generations.
So these are some of the key characteristics that define a sophisticated investor.
It's about developing a unique blend of knowledge, skills, and mindset that allows you to navigate the complexities of the financial world and achieve extraordinary results.
It's about becoming a master of the game, not just a player.
Now, as we transition to phase 5, giving back, we see that true wealth goes beyond just accumulating money.
It's about using your resources to make a positive impact on the world, leaving a legacy that benefits others.
Kiyosaki believes that giving back is an essential part of the investing journey. It's about recognizing that we're all interconnected and that our actions have a ripple effect on the world around us.
So it's about more than just writing a check to a charity. It's about being actively involved, using your resources to support causes you care about, and making a personal commitment to making a difference.
Exactly. It can take many forms, from financial contributions to charities and nonprofit organizations, to mentoring young entrepreneurs and investing in businesses that are creating positive social or environmental impact.
And Kiyosaki suggests that giving back is not something you do only after you've achieved financial success. It's something you can start doing today, no matter where you are on your financial journey.
Even small acts of kindness can make a difference.
And as we give back, we not only make a positive impact on the world, but we also enrich our own lives. We feel a sense of purpose, connection, and fulfillment.
We begin to understand that true wealth is not just about money, it's about making a difference and leaving the world a better place than we found it.
So these are the 5 phases of investing as outlined by Kiyosaki. Are you mentally prepared? What type of investor do you want to be? How do you build a strong business? Who is a sophisticated investor? And finally, how do you give back?
It's a framework for thinking about your financial journey, for developing the mindset, skills, and strategies you need to achieve lasting success.
And in addition to these 5 phases, Kiyosaki also provides a wealth of practical advice and strategies for building a successful business and achieving financial freedom. He talks about the importance of understanding financial statements, analyzing investment opportunities, managing risk, and developing a sound financial plan.
He emphasizes being a lifelong learner, constantly seeking to expand your knowledge and adapting to the ever-changing market conditions.
He encourages us to think like entrepreneurs, to see opportunities where others see only risk, and to take action to create the life we desire.
And he reminds us that the journey to financial freedom is not always easy. There will be challenges, setbacks, and obstacles along the way.
But with the right mindset, the right skills, and the right support, we can overcome any challenge and achieve any goal we set for ourselves.
Kiyosaki's book is a powerful reminder that we all have the potential to achieve financial freedom and live a life of abundance, purpose, and fulfillment. It's about taking control of our financial destiny, making informed decisions, and building a legacy that will last for generations.
And that's a journey worth taking. Now, as we delve deeper into Kiyosaki's ideas, let's start with one of his most important strategies, focusing on building assets that generate passive income.
Passive income is money you earn without having to actively work for it. It's money that comes from investments, businesses, or other sources that generate income without requiring your direct involvement.
So it's like having your money work for you while you sleep, while you're on vacation, or while you're pursuing other interests.
Exactly. And Kiyosaki argues that building a portfolio of passive income assets is the key to achieving financial freedom.
It allows you to break free from the rat race, to have more time and freedom to pursue your passions, and to create a life of abundance on your own terms.
He provides several examples of passive income assets, including rental properties, dividend-paying stocks, businesses, royalties from books or music, and online businesses.
So there are many different ways to generate passive income. It's about finding the approaches that align with your interests, your skills, and your resources.
Right. And it's important to remember that building a portfolio of passive income assets takes time and effort. It's not a get-rich-quick scheme. It's a long-term strategy that requires patience, discipline, and a willingness to learn and grow.
But the rewards can be huge, right?
Absolutely. Now, another key strategy that Kiyosaki highlights is the importance of understanding financial statements.
He argues that financial statements are like the language of business.
They provide a snapshot of a company's financial health, revealing its assets, liabilities, income expenses, and cash flow. And Kiyosaki believes that anyone can learn to read and understand financial statements, even if they don't have a background in accounting.
He provides a simple framework for analyzing financial statements, focusing on key ratios and metrics that reveal a company's strengths and weaknesses.
He emphasizes that understanding financial statements is essential for making informed investment decisions, whether you're investing in stocks, bonds, real estate, or businesses.
So instead of just relying on someone else's opinion or a flashy sales pitch, you can dig into the numbers yourself and make a judgment call based on solid information.
Exactly. It's about empowering yourself to become a savvy investor. Now let's shift gears and talk about the concept of leverage.
Okay, leverage. It's about using borrowed money to potentially multiply your returns right.
That's the idea. It can be a powerful tool.
Yeah.
But Kiyosaki cautions that you need to understand the risks involved. Leverage magnifies both your profits and your losses.
So if you use leverage to invest in something that goes up in value,
You could see a bigger return, but if it goes down...
you could experience a much larger loss.
Yeah, exactly. It's a double-edged sword.
Right.
And that's why Kiyosaki stresses the importance of using it wisely.
So what are some of his recommendations for using leverage safely and effectively?
He suggests that you only use leverage to invest in assets that you truly understand and believe have strong growth potential. Don't just jump into something because everybody else is doing it, you know?
Right.
Do your homework.
He also advises against borrowing more than you can comfortably repay. Don't get in over your head.
Exactly. And always have a solid risk management plan in place.
Okay.
Know your exit strategy if things don't go as planned.
Now, speaking of strategies, Kiyosaki also emphasizes the importance of tax planning. It's not just about paying your taxes. It's about understanding how tax laws can actually work in your favor.
That's right. He points out that there are many legal and ethical ways to reduce your tax liability. It's not about evading taxes.
Right.
It's about optimizing your approach to keep more of your hard-earned money.
So it's about working with tax professionals, understanding the rules, and taking advantage of the opportunities that are available to you.
Exactly. Now let's shift our focus to building a strong business. Kiyosaki argues that this is one of the most effective paths to financial freedom.
Because when you own your own business, you're in control, right? You create
Right.
your own income, you build something of value, and you have the potential to create a legacy that can last for generations.
Yeah. He's a big believer in that entrepreneurial spirit.
And to help guide us on that path, he provides that BI triangle framework we talked about earlier.
Right. It's a reminder that building a successful business is about more than just having a great idea.
Yeah.
It's about having a clear mission, a strong team, effective leadership, sound cash flow management, and a clear communication strategy.
He emphasizes that each element is essential, and when they all work together harmoniously, you create a recipe for a thriving, sustainable business.
He also stresses the importance of networking, building relationships with other successful investors, mentors, and advisors. He encourages us to attend industry events, join investment clubs, and seek out mentors who can provide guidance and support. Learn from those who have already achieved what you aspire to.
It's about surrounding yourself with people who can help you grow and succeed.
Exactly. Now, it's important to acknowledge that while Kiyosaki's ideas have inspired many, they've also generated some criticism.
Of course, yeah.
Some argue that he oversimplifies complex financial concepts or promotes strategies that carry a high degree of risk.
Yeah.
And others question his lack of formal financial credentials or the validity of some of his claims. It's important to remember that his book is not a financial textbook or a step-by-step guide.
Right.
It's a book about mindset,
Yeah.
about challenging conventional thinking, and about taking control of your financial future.
Right. It's meant to inspire, provoke, and empower readers to think differently about money, business, and success.
Exactly.
And regardless of whether you agree with all of his ideas, there's no denying that he's had a significant impact on the world of personal finance.
He's made us question our assumptions, encouraged us to take responsibility for our financial well-being, and inspired countless individuals to pursue their dreams of financial freedom.
So as you embark on your own investing journey,
Hmm.
keep in mind those core principles we've been discussing. Focus on building assets that generate passive income. Learn the language of money and develop the skills to analyze financial statements. Use leverage wisely to potentially multiply your returns. Optimize your tax strategies to keep more of your hard-earned money.
Build a strong business using the BI Triangle framework. Network with other successful individuals who can provide guidance and support. And never stop learning, growing, and adapting.
And remember, it's about the journey, not just the destination.
Mm-hmm.
Embrace the challenges, celebrate the victories, and enjoy the ride as you create a life of abundance, purpose, and fulfillment.
Now let's take a look at some real-world examples of individuals who have successfully applied Kiyosaki's principles to achieve financial success. One example that stands out is the story of Sarah Blakely, the founder of Spanx.
Blakely launched her business with just $5,000 in savings and a whole lot of hustle. She didn't come from a wealthy background or have any prior experience in the fashion industry.
But she had a brilliant idea, an incredible work ethic, and a relentless drive to learn and grow.
She saw a problem women were struggling to find comfortable and flattering undergarments, and she created a solution, Spanx, a revolutionary new type of shapewear.
She started small, selling her product directly from her apartment and at local boutiques. And she bootstrapped her business, reinvesting her profits back into the company without taking on any debt.
Wow.
She built a strong brand, cultivated a loyal customer base, and ultimately grew her business into a billion-dollar empire.
That's incredible.
Her story is a powerful testament to the fact that anyone can achieve financial success with the right mindset, skills, and determination.
That's so inspiring.
Yeah.
Another inspiring example is Gary Vaynerchuk, a serial entrepreneur and social media influencer.
Vaynerchuk began his journey working in his family's wine business. He saw the potential of the emergent internet and started a YouTube channel called Wine Library TV.
Smart.
He shared his knowledge about wine, connected with consumers in a new and engaging way, and built a large and loyal following.
Wow.
He leveraged that success to launch VaynerMedia, a digital marketing agency that now helps some of the world's biggest brands connect with their customers online.
So cool.
He's become a best-selling author, a sought-after speaker, and a social media icon. And he's built a multi-million-dollar business empire, proven that success can come from unexpected places and that embracing new technologies can unlock incredible opportunities.
These are just two examples of the many people who have applied Kiyosaki's principles and achieved extraordinary results. It's inspiring to see how these individuals took his ideas and made them their own, creating unique paths to success.
Now, while Kiyosaki's book primarily focuses on the financial aspects of investing, it's crucial to remember that investing isn't solely about making money. It's also about making a positive impact on the world.
Right, it's about aligning your investments with your values, supporting businesses and causes that are making a difference, and being a responsible investor who considers the social and environmental consequences of their actions.
As you develop your investment strategy, think about the companies you want to support, the causes you're passionate about, and the kind of world you want to help create.
Invest in businesses that are taking steps to protect the environment, treat their employees fairly, and contribute to a more just and sustainable society.
Support organizations that are working to address pressing social issues such as poverty, hunger, and inequality, and use your voice and your influence to advocate for positive change and to promote ethical business practices.
Now let's shift gears and talk about some of the psychological aspects of investing. It's not always easy, is it?
No.
It can be an emotional roller coaster with moments of excitement and moments of doubt, times when the market is soaring and times when it feels like it's crashing down around you.
That's the nature of the game, and it's why it's so important to remember that investing is a marathon, not a sprint. It's about having a long-term vision, not getting caught up in the hype of the moment, and understanding that markets naturally fluctuate.
So how do we manage our emotions when it comes to investing? How do we avoid making impulsive decisions based on fear or greed?
Kiyosaki suggests that we focus on our long-term goals, that we don't get swept up in the short-term noise of the market, and that we remind ourselves that this is a journey with inevitable ups and downs.
He also emphasizes the importance of diversification, spreading your risk across multiple assets and sectors so that you're not overly exposed to any one investment.
And having a solid risk management plan in place. Know your limits, set stop-loss orders to protect your investments, and be prepared to make adjustments if necessary.
Another psychological challenge that many investors face is the fear of failure. They're afraid to invest because they're afraid of losing money.
Kiyosaki reminds us that failure is not the opposite of success, it's part of the process.
It's through our failures that we learn, grow, and become stronger.
He encourages us to embrace failure, to extract valuable lessons from our mistakes, and to keep moving forward. Don't let fear paralyze you.
Now let's transition to some of the more practical aspects of investing. For someone who's just starting out, where do they begin? How do they choose the right investments? How do they manage their portfolio?
Kiyosaki provides a wealth of practical advice in his book covering a wide range of investment topics. He stresses the importance of having a clear financial plan, setting specific financial goals, and developing a budget that aligns with those goals.
It's like creating a roadmap for your financial journey.
Exactly. He also discusses different types of investments, including stocks, bonds, real estate mutual funds, and businesses. He explains the risks and potential rewards associated with each type.
So it's about understanding the different options available and choosing the investments that align with your individual risk tolerance, your investment time frame, and your overall financial goals.
Right. And he also emphasizes the importance of diversification. Don't put all your eggs in one basket. Spread your investments across different asset classes to help reduce your overall risk. He also talks about different investment strategies such as value investing, growth investing, and income investing.
Okay.
Each strategy has its own pros and cons, so it's about finding the approach that best aligns with your goals and your risk tolerance.
And once you've made your investments, how do you manage your portfolio?
Kiyosaki emphasizes the importance of staying informed. Keep up with market trends, read financial news, and consider working with a financial advisor who can provide guidance and expertise.
So it's about being proactive, monitoring your investments, and making adjustments as needed to ensure your portfolio continues to align with your goals.
Exactly. Now, as we wrap up our deep dive into Rich Dad's Guide to Investing, let's explore some of the resources that are available to help you on your investing journey.
There are so many books, websites, podcasts, and other resources that can provide valuable information and guidance. Where do you recommend people start?
Well, Kiyosaki's own website, richdad.com, is a great resource. They offer a wealth of information on personal finance, investing, entrepreneurship, and real estate.
They also offer online courses, workshops, and other educational resources, right?
That's right. Another great resource is investopedia.com. They have a comprehensive online dictionary of financial terms and concepts.
And they also have articles, tutorials, and other educational content on a wide range of investing topics.
Yeah, and for information on investment fraud, investor protection, and other important regulatory matters, the website of the SEC is a great resource.
Okay, the Securities and Exchange Commission.
Right. They even have a database of registered investment advisors, so you can check the credentials of any advisor you're considering working with.
Oh, that's helpful.
In addition to online resources, there are many fantastic books on investing that can provide valuable insights. One classic that I highly recommend is The Intelligent Investor by Benjamin Graham. He's considered the father of value investing.
Oh, yeah, I've heard of that one.
His book offers a timeless framework for analyzing investments and making sound decisions.
Another great one is One Up on Wall Street by Peter Lynch. He's a legendary mutual fund manager who achieved phenomenal returns for his investors.
His book provides a fascinating glimpse into his investment philosophy and strategies for finding those winning stocks.
And of course, no investing library is complete without the essays of Warren Buffett, right?
Absolutely. He's widely regarded as one of the greatest investors of all time.
Yeah.
His essays offer a unique window into his investment approach, his views on business, and his insights on life in general.
Now, if you prefer listening to information, there are also many great podcasts on investing. One that I recommend is Invested, hosted by Phil Town. He's a value investor who follows the principles of Warren Buffett. His podcast provides insights into his investment strategies, market analysis, and thoughts on current events.
Another great one is The Tim Ferriss Show.
Oh yeah, I love that one.
Ferriss is a best-selling author, entrepreneur, and investor, and his podcast features interviews with world-class performers from a wide range of fields, including invest in business, entrepreneurship, and personal development. You're sure to glean some valuable insights from his guests.
Now, as we begin to wrap up our deep dive into Rich Dad's Guide to Investing, let's take a moment to reflect on some of the key takeaways. What are the most valuable lessons we've learned, and how can we apply them to our own lives?
One of the most important takeaways is the power of mindset. Kiyosaki emphasizes that our beliefs about money can either hold us back or propel us forward.
If we cling to a scarcity mindset, believing that money is limited and difficult to acquire, we'll likely struggle to achieve our financial goals.
But if we cultivate an abundance mindset, believing that there are ample opportunities for wealth creation, we'll be more open to possibilities and more likely to attract financial success.
Another crucial lesson is the importance of financial literacy.
We need to understand the language of money if we want to make informed decisions and navigate the complexities of the financial world.
We need to be able to read financial statements, analyze investment opportunities, and manage risk effectively.
Another valuable takeaway is understanding how to leverage debt wisely to amplify your returns. But remember, it's a double-edged sword.
Use it strategically to invest in assets that have strong growth potential, but never borrow more than you can comfortably repay, and always have a solid risk management plan in place.
Now, along with understanding how to leverage debt, it's also crucial to optimize your tax strategies. Work with tax professionals, learn the rules of the game, and take advantage of the legal opportunities available to minimize your tax liability and keep more of your hard-earned money.
And of course, building a strong business is one of the most effective paths to financial freedom.
Use the BI triangle as your roadmap. Create a clear mission, build a talented team, foster strong leadership, manage your cash flow effectively, and communicate clearly and strategically.
And don't underestimate the power of networking. Build relationships with successful individuals who can inspire and guide you.
And finally, remember that giving back is an essential part of the journey. Use your resources to make a positive impact on the world, support causes you care about, and create a legacy that benefits others.
These are just some of the key takeaways from Rich Dad's Guide to Investing. It's a book that challenges us to think differently about money, business, and success.
It encourages us to take control of our financial future, make informed decisions, and create a life of abundance, purpose, and fulfillment.
Now, as we move into the final part of our deep dive, let's explore one of Kiyosaki's most intriguing and potentially controversial concepts, the idea of the insider investor.
This is the investor who seeks a degree of control over the businesses they invest in, leveraging their knowledge network and expertise to gain an edge in the game.
So stay tuned as we delve deeper into this fascinating concept and unlock even more insights from Rich Dad's Guide to Investing. So we left off talking about the insider investor. What exactly does Kiyosaki mean by that?
Yeah, it's about going beyond just buying stocks or bonds, An insider investor seeks a level of control and influence that most investors never achieve.
It sounds a bit like having insider information, but we know that's illegal, so how is this different?
It's not about illegal activities. It's about being so deeply involved in a business, whether it's your own company or one you invest heavily in, that you have a level of insight and understanding that others simply don't.
So it's about being more than just a shareholder. It's about being like a decision maker, a strategist, someone who's actively shaping the direction of the company.
Exactly. It could involve starting your own business, acquiring a controlling stake in an existing company, or even serving as an advisor with significant influence.
So it's about being in the driver's seat, not just along for the ride. But that sounds kind of intimidating. How do you even begin to approach investing in that way?
Well, it's not for everyone, that's for sure. It requires a certain mindset, a certain level of expertise, and a willingness to take on more risk. And that's where Kiyosaki's BI triangle framework comes in.
Ah, yes, the BI triangle. We talked about that earlier. It's his blueprint for building a successful business.
Yeah, it's all about understanding the 5 key elements that drive business success: mission, team, leadership, cash flow management, and communications.
Right. It's about creating a solid foundation, building a great team, having effective leadership at the helm, and mastering the art of managing your finances and communicating effectively.
And the beauty of the BI triangle is that it can be applied at any scale. Whether you're a solopreneur running a small business from your home office or the CEO of a multinational corporation, these principles are essential for creating a thriving enterprise.
So if you want to become an insider investor, you need to master these elements.
Yeah.
You need to understand how to build a business that's not only profitable, but also sustainable and attractive to investors.
Exactly. It's about creating value, not just generating quick profits.
It's about building something that lasts, something that has a positive impact on the world.
Absolutely. Now, one of Kiyosaki's ideas that often raises eyebrows is this concept of minimizing income and even maximizing expenses.
Yeah.
How does that make sense when we're trying to build wealth? Shouldn't we be maximizing our income and minimizing our expenses?
But it seems so counterintuitive.
It does. But Kiyosaki argues that the traditional approach of working hard to earn a high income, paying taxes on that income, and then trying to save what's left over can actually keep you trapped in the rat race.
So what's the alternative?
He suggests focusing on building a business that minimizes your personal income, but allows you to reinvest pre-tax dollars into assets that have the potential to grow exponentially.
So it's about shifting your focus from earning income to creating wealth.
Precisely, and it's about understanding the power of tax-advantaged investing. Businesses have access to deductions and strategies that individuals often don't.
So instead of working harder to earn more money and then paying taxes on that income, you're strategically structuring your business to minimize your personal tax liability and maximize your investment potential.
Exactly. It's a more sophisticated approach to wealth building. And remember, when Kiyosaki talks about maximizing expenses, he's not talking about frivolous spending.
Right.
He's talking about investing in things that will ultimately grow your business and increase your earning power in the long run.
Like education expert advice, acquiring income-generating assets, building your team, and marketing your business.
Exactly.
It's about playing the long game, investing in your future, and creating a system that works for you.
Absolutely. Now, as we wrap up our deep dive into Rich Dad's Guide to Investing, if we had to leave our listeners with one question to ponder, one thought to spark their imaginations, what would it be?
Well, I think it would be this. Are you willing to challenge the conventional wisdom about money? Are you willing to step outside of your comfort zone and embrace a new way of thinking about wealth creation?
That's a powerful question, because if you want to achieve extraordinary results, you often have to be willing to do things differently than the majority. You have to be willing to challenge your assumptions, to question the status quo, and to embrace new ideas.
Kiyosaki's book is a call to action. It's a challenge to think like an investor, an entrepreneur, a creator of wealth.
It's about taking control of your financial destiny and designing a life of abundance, purpose, and fulfillment.
And that's a journey worth embarking on. So as you continue on your path to financial success, remember the key lessons we've discussed today. Focus on building assets that generate passive income. Develop your financial literacy and learn to analyze opportunities like a pro. Use leverage strategically but wisely. Optimize your tax strategies to maximize your returns. Build a strong business using the BI Triangle framework. Network with successful individuals who can inspire and guide you. Be a lifelong learner, always seeking to expand your knowledge and refine your skills. Be patient, disciplined, and persistent in your pursuit of your goals. And remember to give back, using your resources to make a positive impact on the world. The journey to financial freedom is a marathon, not a sprint. Embrace the challenges, celebrate the victories, and never stop learning and growing.
It's been a pleasure exploring these ideas with you. We hope this deep dive has provided valuable insights and inspired you to take control of your financial future.